Okay, well, thank you and welcome to the Chaplain York International Roundtables. I'm going to begin, and I think we're going to get more people join as we go. Today is the European session in English focusing on international tax and legal issues. For those that don't know, the roundtables began with our first international fundraising across borders event, or IFAB, in 2020 last November. And it grew out of our Chaplain York's 25-year history working with organisations and not-for-profits who fundraise across the globe. Tickets are now available for this year's IFAB, which will be held between the 9th and the 11th of November. So please go to the Chaplain York website to have a look at that. At IFAB 2020, we gathered a huge amount of knowledge and resources and wanted to continue the discussion around what was being presented. So therefore, we created the roundtables to continue the conversation. Today, we're really delighted to be joined by Renata Bowes and James Maloney and Nancy Pixon. So I'll give a quick intro about our panelists. So Renata is the Disbursement and Operations Manager at Erasmus Trust Funds, the foundation supporting students and research of Erasmus University in Rotterdam. She obtained her PhD at the same university and researching the fiscal barriers to cross-border giving. A PhD thesis on tackling the international tax barriers to cross-border charitable giving was published by IBFD, the leading publisher on international taxation. Previously, she worked in different positions as a fundraiser, managing director and consultant at arts organisations in the Netherlands and Belgium. Alongside her job at the Erasmus Trust Fund, Renata conducts research at Erasmus School of Law, focusing on the institutional context for international philanthropy. So she's very well established to be talking about this today. She's also published several books, chapters and articles in both professional and international peer-reviewed journals, including the Empirical Legal Studies, Canadian Journal of Comparative and Contemporary Law. She also speaks at the European Research Network on Philanthropy and the annual conference on empirical legal studies at Duke Law. Moving on to James. James is a partner at the law firm Farrer & Co. He advises on a broad spectrum of charities and those who fund, work and regulate on them, and a full range of charity law issues. James helped charity clients with a wide range of legal matters, including helping them to navigate the law on fundraising, including trading and commercial partnerships. He also works with philanthropists on legal aspects of structuring law and their giving, and his work often is international. James is a qualified solicitor in 2005, and he serves as the Deputy Chair of STEPS Philanthropy Advisor at Global SIG Steering Group. He also lectures in his spare time on charity law and charity law at the Bayes Business School, formerly CAS. And then last but no means least, Nancy Pixon is the Managing Director of Chaplain York. She's a lawyer with 30 years experience providing advice on private clients and charities worldwide. She's lived in the UK, Australia and France, and has worked with different organisations across the world in both legal and fundraising capacities. She specialised in cross-border philanthropy and fundraising for a range of organisations and donors. She has BA in Medieval English and History and a Juris Doctor degree, a master's degree in tax law. It's really wonderful to have all three speakers here to answer your questions and join in the conversations. Each roundtable is hosted by Chaplain York Foundation around the world. Today, I'm your host. My name is Helen Maynard Hill. I represent the Netherlands Foundation. I'm British, but I've been in the Netherlands for about 13, 14 years. I fundraise in the UK and Europe, as well as helping organisations all over the world. Although I'm the host, I'd like you and the panelists to do most of the talking, because this is my long bit over. I'd also like to encourage you to ask questions, raise your hand or via the chat box. If you are talking, I would ask you to switch your camera on, because it's always easier to talk to an actual face rather than just a blank screen. Also, we will be recording the session, as some people who haven't been able to make it today have asked for the recording to be sent to them afterwards. Last thing, Chatham House rules apply, which means that this is a trusted environment and we try to understand and resolve complex problems. So what goes on tour stays on shore. So that's my long introduction over. And I'd really like to firstly hand over to Renata to take the floor.
Thank you so much, Helen. It's lovely to be here. Thank you for the invitation to share our expertise on this particular topic. As you said, I'm a disbursement manager at the Erasmus Trust Funds. We're a foundation supporting the university here in Rotterdam, and we target the high net worth individuals, raising individual gifts varying from 25,000 euros to 5 million. We engage with our alumni of the university and, of course, the parents of the current students. Sometimes they are located here in the Netherlands. It also happens that they reside abroad. This is immediately where my knowledge of cross-border charitable giving comes in very handy in my daily practice. But I guess my work at the Erasmus Trust Funds is not the reason I was invited. It's probably my expertise, the expertise that I gained while doing my PhD research on the tax incentives involved in cross-border charitable giving while I was doing my PhD research. For that particular research, I tried to answer the question how charitable organizations can best facilitate their foreign donors with a tax benefit. So really from the perspective of the charitable organizations. To do so, I did research among 36 arts organizations in different countries, both within Europe and outside. So in Australia, Europe, Australia, the US and Canada. I focus on arts organizations, but basically in tax law, what applies for charitable organizations, whether it be an arts organization, a fund supporting a university, another type of charity, it applies to all charities. As long as, of course, the activity of the organization matches the definition of charitable organization in the country that you're looking at. I compared several jurisdictions to see how tax legislation varies when it comes to tax benefits on cross-border charitable giving. And from that, I saw that there's a very big difference in how countries treat donations to foreign organizations. So today we're focusing on the tax incentives on cross-border charitable giving. And that can be done, like obtaining a tax benefit on a cross-border gift can be made in different ways. A donor can make use of an intermediary charity like Chapel in York or other intermediary charities. They can rely on a tax treaty between two countries, but then of course the donor has to reside in a country that has a tax treaty with the country where the charitable organization is located. Some countries have also decided to unilaterally open up their tax benefits to cross-border donations. An example is the Netherlands. In the Netherlands, it's possible, me as the Dutch taxpayer, I can make a charitable donation to a charity located abroad, for example, a UK charity, as long as that charity meets the requirements that the Dutch tax authorities impose on public benefit organizations. This is an exception, though. This doesn't happen too often that a country opens up its tax benefits to donations to foreign entities. And finally, one can obtain a tax benefit on a cross-border donation by relying on a supranational agreement, such as in Europe, the European Union, the Treaty on the Functioning of the European Union, and the fundamental freedoms included in that. Well, I was asked to focus on the latter, to focus on the European situation. So,
can I just interrupt you? Would you like me to share your screens, share your slides at the moment? Yeah, yeah.
This would be the perfect moment to show the first slide. Okay, thank you very much, Helen.
Okay.
So in Europe, and there the first image is, and then I lose my notes. I'm sorry, 1 second. Yes, there they are again. So in Europe, every country can decide for themselves whether they want to facilitate donations with a tax benefit or not. So if, for example, Belgium tomorrow says we don't want to support charitable organizations indirectly, then they can remove the tax benefits on donations to charity, and Belgian donors will not be able to obtain a tax benefit. However, every country in Europe that facilitates or that has a provision in their tax regulations facilitating a tax benefit on a donation to a charitable organization also has to apply that on charitable donations to organizations located in other EU member states, with the condition that this would the organization be located in the country where the donor is residing, the donation would qualify for a tax benefit. And this is all based on the Treaty on the Functioning of the European Union, which includes the 4 fundamental freedoms. And it basically stipulates that EU member states may not discriminate against charities based on residency requirements. Well, here in front of you, you see a map made by included in a very interesting report. It's called Rules to Give By. And this map shows how easy it is in a country to give to charity. And you can see, although it's a minor portion of the image, that the most countries in Europe are colored green. So in most countries of Europe, there are tax benefits on cross-border giving, and there is a friendly environment that stimulates giving to public benefit organizations. This is all based on the national legislation of these countries. And now within the EU, it says that these national legislations may not discriminate against charities located in other EU member states. Thus, charitable organizations and their donors residing in other EU member states shall not be treated different under the same circumstances. And this was confirmed in several cases by the European Court of Justice, of which, in this case, the most relevant one is the Persch case. Helen, if you could go to the next slide.
Yeah.
So here you see a little cartoon of the Persch case. So Hein Persch, a German citizen and taxpayer, donated goods to an elderly home in Portugal, and he claimed it for a tax benefit in Germany for his income tax. Then the German tax authorities said that that it didn't grant a tax benefit on the gift, and then he started a procedure at the European Court of Justice. And by coincidence, Mr. Persch is also a tax lawyer, so he knew what he was doing. And based on that case, the European Court of Justice ruled that Mr. Persch should obtain a tax benefit on his donations from the German tax authorities, because if the elderly home would have been located in Germany, a tax incentive would apply. And since the elderly home was located in Portugal and public benefit organizations located in other EU member states may not be discriminated against based on residency requirements according to EU law, the German tax authorities did have to grant him a tax benefit on a cross-border gift. Helen, you may now stop sharing the slides.
Okay, I was going to ask you about. I was going to ask you about this report, actually, about the tackling international tax barriers to cross-border charitable giving.
Yeah, so it is a very interesting. The image you're looking at now is my own dissertation on the topic, but the report I just referred to is a very interesting one that gives a brief summary of the legislation in many countries. And unfortunately, it's a bit outdated already. It's from 2014. But it can still be a first starting point to do your research on the tax legislation in a different country. Okay, so the thing is, within the European Union, although countries cannot discriminate against public benefit organizations located in other EU member states, it is not the case that charities located in other countries are automatically recognized by tax authorities across Europe. So that makes it a bit difficult, because the proof is upon the donor. He has to show that the donation would qualify, his cross-border donation would qualify for a tax benefit were it made to a domestic organization. It can be difficult to demonstrate this. Because sometimes in some European countries, it's still rather vague what is required from a charitable organization to be recognized, to be eligible to receive tax-deductible gifts, for example. But that varies across countries. In Luxembourg, for example, the donor can easily fill out a form, tick the box that the charity in the other EU member state does meet the requirements of its own country, and that it does contribute to the public benefit as defined by the
Oh,
as defined. Sorry. Go ahead, Helen.
no, sorry, carry on.
As defined by the Luxembourg authorities, but in other countries it might be far more difficult. For example, in France, the requirements are not always as clear, and renewal of charitable status has to be requested every few years, so that can be difficult. In the Netherlands, for example, although a foreign charity can register here as a public benefit entity without having to establish a legal entity here, or it can be recognized as a public benefit entity according to Dutch law. It does have to meet all kinds of requirements. So that makes it difficult for donors to rely on EU law to obtain a tax benefit when giving across when giving across Europe. It brings in a lot of uncertainty, and it is very time consuming for charitable organizations to see what the specific requirements are that they have to meet to be eligible to receive tax deductible gifts. And of course, then also a lot of costs come in if it's time consuming. What I found in my research is that it's way more interesting and cost efficient and to make use of an intermediary charity. So if you want to give across Europe, it's far more interesting to make use of a network of charity or charitable organizations where the donor gives to a domestic charity, and then that charity makes a grant or gives a grant to the charity that the donor has in mind, that it wants to stimulate and wants to support abroad. What I briefly wanted to touch upon is that I now describe the current situation in Europe. The intermediary charities are very active in Europe because of European law not being very efficient. Attempts have been made to introduce a European Foundation Statute by the European Commission. That proposal was introduced in 2012. But unfortunately, that was withdrawn again in 2015 because there were some practical issues that the member states could not agree upon. And the main thing was in the recognition of charities, in recognizing each other's charitable status. So that member states had to rely on the supervising authorities of other countries to supervise whether a charity was actually charitable. And that was the main reason, I believe, that the proposal for a European Foundation was withdrawn, which is very unfortunate, but perhaps in the future it will be brought up back again. So that was for now my brief introduction.
Okay, thank you, Renata. That's super interesting. About, do you know if there's any kind of moves to relook at that and readdress that, because it's some years ago? Or
so from the sector, there's some lobbying being done, mostly by the European Foundation Center, which is a branch organization of European foundations, and they're still very active in this. But right now, it's low on the political agenda. There's more urgent issues right now, and this is not perceived as urgent. So for now, nothing is being done, and it's officially withdrawn.
So going back to the Pesh case, is that the pronunciation?
Pesh.
Yeah, Pesh. So for example, if there was a donor in another European country, so for example in Germany, and they wanted to donate to a Dutch charity, because it's still within the EU, would they still be eligible for taxable deductions in Germany?
Yeah, so in theory, the donor would be able to obtain a tax benefit on the donation to the Dutch charitable organization. The difficult thing is that the German donor will have to prove that that the donation qualifies. So, for example, under German law, and I don't know the specifics of every jurisdiction in Europe. You have to. I have to apologize there. I can't know everything, especially since it's changing so fast. But for example, the German. I know that a few years back, the German tax law said that um, donations to charitable organizations in other EU countries were allowed. So that's good. That's in line with European law. But if you looked at the definition of what qualified as contributing to the public benefit, then it said that, for example, when it comes to culture, donations only qualify if they contribute to German culture. So then it would have been, in theory, be possible to contribute to an art organization located in the Netherlands if it would advertise or stimulate German culture.
Right.
And that's of course something very difficult to prove, and it's also very difficult to. It's a lot of uncertainty for the donor to show that his donation would qualify for a tax benefit if it were made across border.
Yeah.
That it actually meets the requirements that the Germans put upon.
Yeah, it's also quite specific as well, isn't it?
Yeah,
Like,
yeah. There's a lot of particularities in tax law that make it very difficult. So, for example, in the Netherlands, it says that the public benefit organizations have to meet all kinds of requirements. And for example, in the dissolution clause of an organization, it has to state that the remaining funds, when being dissolved, have to be spent on a comparable organization. And it used to be it used to be that the donations had to be spent on a particular Dutch charitable organization. Now this was removed, but still it's very difficult, of course, for a German organization to, in its dissolution clauses, include that it will disburse its remaining assets on dissolution to a Dutch organization. That would be really weird. So the comparability test makes it very difficult to rely on EU law.
Yeah, it's so complicated, isn't it? I mean, and I guess because it's not just dealing with one or two countries. There's so many different, countries and cultures and factors to kind of combine. It's quite a difficult thing.
European law would work perfectly if countries would rely on each other for supervising the charitable organizations. Like, for example, Luxembourg does to a large extent. In Luxembourg, they say to their donor that the tax benefit applies if to a cross-border gift to another EU country if the recipient is qualified as a public benefit entity in its own country.
Right.
And of course, it would work much easier, but most countries do not have a lot of trust in each other's in other tax authorities.
Yeah, how interesting. Great. No, that's really super interesting. I just for the purpose of time, we're going to have to move on. But maybe anybody that's watching this or listening, if you have questions for Renata, then we can come back to it after James and Nancy have spoken. So I want to kind of freeze frame that, and because it's such an interesting conversation. But just because time's moving on. So James, do you want to take the floor, and then we'll head back to Renata later.
Thank you, Helen. Thank you, Helen, Nancy, and Chaplain York for inviting me to join you all today. Thank you, Renata, for that very interesting introduction. I'm going to have a look at the UK tax reliefs that are available, notably gift aid. I'm also going to have a brief look at how the UK rules affect charities that raise funds internationally. But I'm going to start with a few general observations about the UK. And I should say, when I'm talking about the UK, I come at this from the perspective of an English qualified lawyer. Charity law is devolved within the UK, so there are some differences of law and regulation between England and Wales on the one hand, and then Scotland and Northern Ireland as separate jurisdictions on the other. Fortunately, gift aid is a UK-wide regime, so we don't have to worry about differences there. The UK generally is has a legal and regulatory framework that makes it relatively easy for charities to raise and spend funds globally. I say relatively easy because there are always frictions with cross-border giving, but compared to some other jurisdictions, the UK does have a relatively relaxed view. The upside of using the UK is that you get a UK registered charity, which is something that is transparent and well respected, whether you use that through an intermediary or whether you use that by setting up your own UK entity. And that protects donors who know that UK charities and their trustees are accountable, and it also reassures funders and partner organisations. The downside of the UK is that charity regulation isn't something we do lightly here. We have the Charity Commission, which is the main regulator of charities in England and Wales. Scotland and Northern Ireland have their own separate regulators. We have HMRC, which is our tax authority and regulates charities for tax purposes. We have the fundraising regulator, which regulates charity fundraising. And we have a panoply of other regulators, including the Information Commissioner for data protection purposes, that charities that are raising funds in the UK will need to think about. In another sense, however, the UK system is relatively light touch because an overseas organisation that wants to come to the UK and raise funds doesn't necessarily need to do much by way of registration or establishment compared to what might be the case in other jurisdictions. Occasionally, the courts here have found that they have jurisdiction over charities governed by foreign laws where they have trustees based in England and Wales, but that's pretty unusual. There are, of course, reputational and perhaps also operational issues that might point towards international organisations operating in the UK wanting to set up something more formal or use a more formal intermediary. That might be particularly the case if they're bidding for funding, but also more broadly, the transparency of UK charities means that the reputation of having a registered charity on the Charity Commission website that one can point to is quite important. And of course, also, and sort of bringing me on to the next part of what I'm planning to talk about, the tax system doesn't, for the most part, recognise donations by donors who don't have UK source income. Sorry, there are a lot of negatives in that sentence, but I'll unpick that a little bit as we go along. There are several tax efficient ways that UK individuals and UK businesses can give to charities. And I'm going to have a closer look now at the gift aid scheme. There are also schemes for cash gifts by businesses and gifts of certain assets, such as UK land, and also certain kinds of investments that are recognised in the UK tax system. The first thing to say about gift aid is that it is quite an unusual system, particularly for those coming from other jurisdictions, because in many jurisdictions, the tax system recognises gifts to charity by making a form of recognition to the donor. Now with gift aid, at least as the system applies to cash gifts by individuals, it's more of a hybrid system where the initial benefit is to the receiving charity, and then for donors who are higher or additional rate taxpayers, there is a form of recognition for the donor as well. So what do we mean by that, and what does gift aid require? Well, I suppose first there are some safeguards that need to be considered with any gift aid donation. So a gift must be unconditional. It can't come back to the donor in one form or another. It can't be part of an arrangement for the charity to buy something for the donor. It can't be a disguised payment for something. And it also can't give the donor significant benefits in return. I'm not proposing to go through what are some very complicated donor benefit rules today in the interest of time, but a lot of difficult questions about gift aid can relate to the benefits that somebody making in return for a gift wants to receive. The basic rule to remember is that if a donor benefits significantly from their gift, that isn't going to be treated as an eligible donation for the purposes of gift aid. And also, and importantly, for the purposes of international fundraising, to be eligible for gift aid, a gift must be made by a UK taxpayer. It doesn't need to be a UK citizen, but an individual must pay enough tax in the UK to cover the value of the reclaim. So that's a very brief look at sort of eligibility for the scheme. what is the effect of a gift aid donation? Well, I've set out on the slide that you can see how it works in the slightly different cases of basic, higher and additional rate taxpayers. For gifts by individuals, gift aid allows the charity receiving the donation to reclaim what would have been the basic rate tax on the gift. If the donor is a higher rate 40% taxpayer or an additional rate 45% taxpayer, gift aid will also allow them, the donor that is, to reclaim the difference between the basic and the higher rate, or the basic and additional rate of tax on their donations. And I expect some of you may be very familiar with this system already, but I know it can be hard to work out gift aid without some examples. So I've included some on the slides in front of you, and they show, I suppose, just how differently gift aid works in the case of a basic rate taxpayer, a higher rate taxpayer, and then an additional rate taxpayer. And what you can see from that is that in each case, the charity receives effectively a sort of top-up in the form of what would have been the basic rate tax paid on the gross equivalent of the gift. And then for higher and additional rate taxpayers, the donor also has the ability to claim back the difference between the basic and higher, or basic and additional rates of tax. And I think if you sort of do the sums and add this up, you can see just what a valuable scheme gift aid is, because in the case of a higher rate taxpayer, for the example that I've given, a donation that costs the donor the net of £75 once you allow for his part of the reclaim results in a gift to charity of £125. In the case of the additional rate taxpayer in the example I've given, the charity ultimately receives £1,000, but this only results in a net payment by the donor of £550. So I think that illustrates just what a valuable scheme gift aid is. And I don't think it's fully understood. There are certainly cases of underclaiming for gift aid, and I think it's important that charities and their donors understand its full potential. There are also other ways in which the UK tax system recognises gifts to charities. Donors are also able to give qualifying shares, but there are some complicated eligibility requirements in terms of what shares benefit from the scheme. But in doing so, where those shares are eligible, the donor can claim income tax relief and can also get capital gains tax relief. The position is similar with gifts of land. Donors can give less than its market value, and in doing so, again, can claim income tax relief and capital gains tax relief. The interesting thing about gifts of assets is that they can sometimes prove to be a better deal for the donor than selling an asset and gifting the proceeds by way of cash through the gift aid scheme, but the benefit to the charity may be lower that way. So there can sometimes be an important discussion to be had with a donor about which scheme works better in which situation. I said I'd just touch a little bit on how the UK rules affect charities seeking to raise funds internationally. So can only UK citizens donate to UK charities? No, as far as UK rules are concerned, anybody can donate to a UK charity. The recipient organisation does need to think about what the law expects. The Charity Commission has something called a Know Your Donor framework, which can mean more onerous requirements for gifts from some jurisdictions. But crucially, for the purposes of what we've been discussing today, the tax treatment of those donations will depend on the donor's own position and the relationship between their country of tax residence and the UK. Can donors who are UK resident but not UK citizens donate? Yes, they can, and the tax treatment will depend on a number of things, but it's possible that those donations may be eligible for gift aid, provided the donor has UK source income and pays enough UK tax. The slight footnote to that, it's a bit more than a footnote, is that there may be consequences in another jurisdiction, particularly if the donor is a citizen somewhere else, and US citizens who are resident in the UK can experience some particular complexity, which I won't sort of touch on, given that we're looking primarily at the European perspective today. So what about donors who are resident outside of the UK, but in the EU, can they donate? Well, from a UK perspective, there are no restrictions at all, and they're likely to be regarded as lower risk in terms of the Know Your Donor framework from a jurisdictional point of view. However, on the question of tax relief, I'm afraid this is, as Renata has demonstrated, an absolute minefield because of the very complex way that the judgments from the European Court of Justice have been applied in different jurisdictions. And I haven't gone into the Finance Act here, which was the piece of legislation by which UK law recognised the potential for European organisations to be recognised under our UK tax system. It really is an example of how the European legislation has been applied more in theory than in practice, because even while the UK was still part of the European Union, while the Finance Act provided on the face of it a scheme for European organisations to be registered, in practice that process was extremely difficult to achieve. So are there solutions to this conundrum? Well, yes, there are, fortunately. There are intermediary facilities, as Renata mentions, that allow donors to give, and for charities across European jurisdictions to receive through a network of philanthropic institutions. And that brings me very neatly on to our host, Chaplain York, and I'll hand back to you, Helen, at this point.
Thank you. That was a very nice connection there. I just wanted to ask what you think are the challenges, or what are the barriers for gift aid? Because gift aid has been around for years, and I'm quite surprised actually, because I haven't lived in the UK for, I don't know, 14 years or so, and I worked a lot with different charities when I was there, and it was very, it was very common then, I thought. But I'm just curious to know why more charities don't make use of it. Is it difficult to implement, or what do you think of the kind of barriers to making it happen?
I mean, there are some formalities that can make it quite difficult in practice. And until quite recently, it was always necessary to have a gift aid declaration, even for very small donations. We do now have something called the Gift Aid Small Donation Scheme that offers a little bit more scope for charities that might be getting a lot of very small donations to be able to make reclaims without having a signed declaration. But I know that some of that sort of paperwork and formality around the scheme has been off-putting. I think also that, I mean, the complexity of gift aid is both its beauty and its curse, because it does result in this shared benefit to charities and donors. Those who perhaps haven't understood the complexity in full can find it quite difficult to navigate. I think that the fact that there is this primary benefit to the charity makes it a really attractive and important tax benefit, and quite an unusual one when we look internationally. And I think it also makes it harder for sort of hostile attacks on the scheme, because there is this primary benefit to the charity. But I do think that complexity has made it hard for some people to understand it.
Yeah, that makes sense. Great. All right. Well, thank you so much. Again, we're kind of, an hour is a very short amount of time to cover a lot of ground, so I'm going to have to move on to Nancy. But again, please do keep questions coming in, and we can look at them once Nancy has spoken. So Nancy, if you want to take the floor.
Thank you very much, Helen. Thank you, Renata and James, for your comments. I'm going to change what I was going to talk about to focus on sort of picking up some of the questions that we've been addressing. I'm also an expert in doing things quickly, because I always seem to be last and when there's very little time to talk. So I'll try to talk fast and say lots of exciting things. The most important thing, I think, is that, around the world, obviously, there are questions. Most tax regimes, in fact, I can't really think of any that don't work this way. Most tax regimes focus on giving tax benefits if the money goes to a local charity. In some countries, that local charity can give the money to charities outside that country. In America, this has been possible for the last 100+ years, rather longer than that now, as a matter of fact, so that you get the U.S. tax deduction if you give to a local U.S. charity, and then that charity can give money to a foreign charity. And that's true that the local charity has got to be the recipient. Now, in some jurisdictions,
It is almost impossible to get a charity tax deduction, or it is impossible if the money goes outside the country. And that's very true in Asia, particularly. And Australia, we have been trying for years to try to get money out of Australia, where there could be a tax deduction for giving to an Australian charity. They've now had this little tiny crack of, if it goes for poverty, they're going to allow a tax deduction. But New Zealand, for example, who has all the universities in New Zealand have tons of Australian that go to the universities, and they've been lobbying the Australian government, even during COVID, to give tax benefits to giving to an Australian charity when the money went outside Australia, and it made absolutely no difference. So most of the world doesn't really like money going outside the country, and to be able to still get a tax deduction in that particular country. There are some solutions to this. First of all, I would say that one solution that people have looked at is setting up charities in other countries. And they've done it in the States, of course, for years. Then they moved over to Hong Kong to set up a Section 88, etc. And we've done this for years. I mean, 25 years, I've set up 501c3s in the States and UK charities, etc. I've come to the conclusion that probably it doesn't make sense if you're only looking at fundraising in another country, because the idea of having a full-blown charity with the increased risk of as charities become more difficult to run and more regulatory issues. And then there's that four-letter word called bank, and how you get bank accounts and how you keep them. So that actually setting up charities in other countries, unless there's a really good reason. And I know that looking at this, that we look after a couple of the people who are on this call, they're US entities. And so it's not, and there are universities, particularly the ones, and arts organizations that probably, you could make an argument that says having a legal entity makes some sense in some jurisdictions if you're going to have ongoing fundraising. But increasingly, I've come to the conclusion that really what you need is just a way of getting your money tax effectively to the donor, because that gives you a level playing field with local charities to fundraise. And for that reason, Chapel York, we've embarked on setting up charities in what we consider major markets. So that's US, UK, the Netherlands, Switzerland, Hong Kong, and Singapore, and now Canada. And Canada's regulatory regime is absolutely a nightmare of getting money out of Canada, but it is possible to do, and they have a very good tax benefit where you get to reduce your tax paid as opposed to reducing the income. But you have to actually, it's almost a partnership with the foreign entity, or paying the foreign entity, pain in the neck, but it is possible. We've just now, after years, got our Canadian charitable status. So that is the sort of the way that we've tried to address this issue. But also, of course, within Europe, and I know there's a question about what in the hell do you do with Europe, there is something called Transnational Giving Europe, which was set up with CAF and the King Baudouin Foundation, who is running this scheme throughout Europe, whereby, for example, it avoids this issue of whether Germany will decide that a Dutch or a British or a Swiss or a French charity is going to qualify, as Renata was talking about, under German law as appropriate to give to and get a tax deduction. So what basically happens during transnational giving is that the German donor would give to the German member of transnational giving, who would then give it to the French member of transnational giving, who would then give it to the charity in France. So ultimately, the idea is the French charity gets the money. Excuse me for the dogs. They only bark when I'm on a call like this. I'm like having small children again. And the German owner gets the tax deduction. It is clunky. It's painful. But it does work, and is one of the ones that was involved in setting it up. I can say it's clunky, and but it works. So it is a possibility of something which you can use within Europe, and it doesn't always work, but at least it's there. Obviously, we also think that our Dutch foundation can help be a spearhead into Europe, and particularly some European giving can go through a partnership with the Dutch foundation and EU charities, whether it's UK or somebody or someplace else. So there are options out there. So I would encourage anybody to look at some of those options rather than just, throwing up their hands in terms of, Europe is such a problem. I have to say we've looked at whether we want to set up things in Europe, and we've sort of thought that probably some of transnational giving does work, but obviously if you're outside of Europe, and in Australia or other countries, etc., it's not going to work at all. So there are some options, both Chaplain York, King Baudouin Foundation, Transnational Giving, lots of other things that are out there. And so if this is something where you are going to be getting lots of donations, it's worth, engaging with me, with Renata, James, etc., and anybody else that is involved in this, because there are systems that can help you. So that wasn't what I was going to say, but I hopefully think that might help with really kind of bringing this whole thing together. So Helen, over to you.
Okay, great. Thank you, Nancy. I think, oh, I've got an echo. Yeah, I think, what Nancy was saying is there are options, although the European marketplace, I guess, looks complicated. There are solutions out there, and it has been done, because we've actually got a question from Matthew. So Matt, thank you for doing that. Matthew's question is, how does one overcome the obstacles in the EU? So this is what we're talking about, especially in their case, a gift from Germany to the UK. Does every German donor really have to individually prove their tax authority that our UK charity meets the German public benefit test? Is that too great an obstacle for many donors? So I guess what Matthew's asking is, if a German donor has to prove the validity each time, is that just going to be, is that going to put them off? So that's a question to the panel. Or is there a simpler way to do it? So the German donor wants to give to the UK charity and get a tax benefit, but proving that tax benefit is viable it seems quite a difficult thing. Is there an easy way to do that?
So I first think we to give a first response. Of course, due to Brexit, the UK is not considered Europe anymore, and the German donor will not be able to rely on EU law to obtain a tax benefit on a donation to the UK. So here it would become a donation from an EU member state to a non-EU member state. And thus all you would have to rely on another solution. And if you would ask me, the only solution would then be to go through an intermediary that collaborates with the UK. And in this case, Transnational Giving Europe might be helpful.
Okay, thanks, Renata. Nancy?
Well, I think also obviously our Dutch foundation may be able to also collaborate with the UK charity to access the German donors and make certain that they get a tax deduction, which may be, depending on the different options, may be a simpler way of dealing with it.
Yeah.
Either one.
Indeed, any intermediary would work. Yeah.
And just to add to that, as I think the point was made earlier, when Nancy was referring to the sort of the clunkiness of some intermediary routes, and as Renata sort of suggested, we would also need to think quite carefully about the rules that we're applying for sort of charitability and public benefit usage of the funds. Even by using an intermediary, you don't necessarily get around those rules, and they can still be quite complicated. I know, for example, that using an intermediary route through some jurisdictions, they may take a different perspective on whether religion is charitable, for example, or on what parts of the arts and the cultural sectors can be funded through charity, as Renata has explained. So I think the intermediary route is the best solution here, and possibly the only solution, but there may still be some frictions along the way.
Great, thank you. And I think, I mean, obviously, I run the, well, not obviously, but I run the Chaplain York Foundation for the Netherlands, and we do have, we are in Europe, so we are open to working with organizations that need some sort of help with that, with donations and granting. So please feel free to reach out to me to discuss this further as well afterwards. Matthew Patton, you've got a question.
Yeah, hi Helen, and hi
Hi.
panel. Really nice to see you all, and thank you for your expertise and wisdom. Very quick question. I'm Matt. I work for Catalyst 2030. We're based here in the Netherlands, and my remit is raising funds internationally, particularly at the moment focusing on US markets. We're in the process of exploring fiscal sponsorship partnerships, both in the US and in particular countries around the European Union, for various reasons. You've talked about intermediaries. I wonder if you're thinking along the same lines as fiscal sponsor routes, or is that just an American word for intermediary? So that's the first question. And then secondly, because I'm a fundraiser and I'm always looking at the numbers, the fiscal sponsors that we've been talking to are looking for about a 10% share on the donation, which is an eye-watering figure for me as a fundraiser. If we're talking about bringing in $1 million, that's 10% of $1 million, that's 100,000. Can anybody give any advice as to whether there are other more cost-effective routes to achieve the same end, which is financial management, taxation, etc., and process of the donation? Thank you.
So probably I'm the US person on this. So fiscal sponsorship is a specific legal sort of thing in the States where, and it's used particularly with trusts and foundations that give money, and then the recipient US entity is a fiscal sponsor for the foreign organization. But it's not exactly the same as being an intermediary, but it's sort of what they use in that particular stuff. And I can talk to you off this about that a little bit more specifically. But without trying to sound like we're doing an advert, I mean, the Chaplain York Foundation will keep 1% of money that comes through. I mean, you're a member, and if you join us, as a member, then we'll keep 1 or 2% depending on what kind of membership you have. So 10% is sort of taking the piss a little bit, if you'll pardon the expression. I mean, that's just being a bit over the top.
Absolutely.
I don't know who you're talking to, but
Yeah.
I want to meet them because they're creaming money off quite outrageously. And you're right. I mean, it is also a problem because you have a responsibility to your donors for the money to get to you, and so you've got to be very careful about what you're doing to ensure that that you are actually getting the most amount of money possible, because that's your fiscal responsibility for a donation. So let's talk offline on this. But,
I'd love to.
There are some other things, and even some of the other ones won't cost you that much either.
Super, thank you.
It's a lot. 10% is a sharp intake of breath, right?
Yeah.
Wow.
Hell yeah.
Yeah. James, Renata, you got anything to add to that?
What I was just thinking is that indeed these amounts are large, these percentages, but then there are the tax benefit for the donor is also enabled, and then you get a tax credit or a tax deduction, and that them a lot of money. And in my research, I came across organizations who then had their donors contribute towards or make an additional donation to cover the costs for the intermediary.
And the only observation I would add is that whilst I think the costs Matthew mentioned do seem very high to me, I suppose in many cases this is the alternative to having to set up, fund and operate a separate establishment, which can be very expensive indeed. So whilst I'm sure it makes sense to try to get the best deal through using an intermediary solution or a fiscal sponsorship route, as in the US, that there can be even more expensive options, is I suppose the point that I would make. Yeah,
but also there's cheaper alternatives as well.
Yeah.
So
Yeah.
Right. So great. Good to see you, Matthew. Nice to see you, by the way. We have got one more. We've got one more question. Actually, we can squeeze in. We've got another 4 minutes. So there was a question from, I think it was Matthew again, another Matthew. Is that they are an international British charity that is legally registered in the UK. This means that the major donors, again in Germany, Australia and the US, cannot make tax efficient gifts to them, and probably not legacy gifts either. Since they are small income, like 500,000 per annum, can you recommend an economic way that they can facilitate the gifts? So basically gifts from Germany, Australia, USA to a UK charity.
So again, I would say from Australia, just get the money. There's no tax benefits at all. So just get them to write a check. There's no gift. There's no, I think I'm right in saying there's no inheritance tax in Australia either. So they can leave money, but there's no tax. You don't have to worry about the tax issues there because you're not going to get any. And then we've talked about the states before. So I think that's probably, you know, I think if I'm right, I think that Transnational Giving Europe keeps about 5% as they move the money around.
Yeah,
indeed, and it also depends on the size of the gifts, because if really considerable gifts, I think it's 1% and it's even negotiable.
Yeah,
I think the question does illustrate beautifully the difficulties that are faced, because we're looking at 3 jurisdictions whose relationships with this issue and how the funds get to the UK are very different, and even operating in a relatively small number of jurisdictions can make things very complicated.
Great. That's, yeah, totally. I mean, especially if you're looking to fundraise internationally, it's dealing how do you firstly reach out to people firstly, and then secondly, how do you help them to benefit mostly from the donations is the next question. So but yeah, reach out to, again, don't want to keep advertising, but reach out to Chapel New York, because we do have foundations all over the world, and we'd be more than happy to help anybody that's looking to fundraise internationally. I've been asked by Grace if Renata can repeat the report that you mentioned that summarizes the tax benefits for the countries. Great. And Renata shared a link. So what we'll do afterwards, we'll send everyone a copy of this recording, and we'll ask for some feedback as well, because we're always looking to get feedback to improve, but also it's always interesting to hear what people think. This is the last roundtable for this year. We're going to have a break because we have IFAB in November, but we're going to start again, I think, in the spring of next year. So we'll keep, we've got your contact details, and obviously we'll keep you posted with everything that we're planning to do. If you can take 5 minutes to fill in the feedback form, it'd be great. So we'll share the recording. We'll also share the report, the link, Renata, if that's okay. And are we okay to share your slides as well, James and Renata? Is that okay to share the slides that you created? Great. So we'll share that as well. But yeah, I just want to say thank you. It's been a super interesting hour of tax and legal issues internationally and focusing the UK and Europe. And if anybody has any questions, then I think everyone has my email address. Please feel free to reach out. But thank you, everybody, especially to our wonderful speakers, to James, Renata, and Nancy. Yeah, thank you for joining us. It was really, really helpful and interesting. Thank you.
Thank you all.
Yeah.
Thanks, everybody.